the 30 minutes chart targeting the volume point of control of this day. We are in the 1 minute chart, bullish cumulative volume delta and also positive delta. When that breakout is made, big trades being activated as large bubbles, which means large institutions, hedge funds and banks, smart money has involved in push up. Then the second thing is, when we are looking into a retracement, we draw this volume profile for this price leg. The reason for drawing that is, in the retracement, there is a chance where the price retrace into low volume nodes. So that is why the algorithm and the price retrace towards this low volume nodes too. So I'm in the S&P 500 1 minute chart now. I'm in the Nasdaq futures chart now. There's a bullish stacked imbalance with a green bubble. This is potentially an area where the price could start going up. Now let's discuss how to identify the fair value gaps precisely using volume profile concepts. Now I'm in the 5 minutes chart. We exited our trade for a remarkable 1 to 4 winning trade. So I'm in the micro mini Nasdaq index futures 30 minutes chart. So if you look at the overall price in the last few days, it has a more bearish direction. And if we look at the last 2 days, you can see the price sharply pushed down. And now you can see the price is in a retracement. And if you look at today's price action, you can see the price in this area is in a range. So this is 9:30 a.m. New York time. So when we see the price is in a range, then we are not sure whether the price will go in the downward direction or in the upward direction. So for today's trading, there's two possibilities. One possibility is the price could go down towards the volume point of control of the previous day, or if not, the price could go up targeting the volume point of control of this day. So for us to decide entry, we have to analyze the price action further. So now we will jump into the 5 minutes chart to analyze further price action. So this is that range in the 5 minutes chart, and you can see at 9:30 New York time, the price sharply pushed upwards from this range, and also that's with heavy volume and the cumulative volume delta also being bullish at that time. The delta is also bullish, the green delta over here. So that is the first indication for us that there is a possibility that the price could go towards upward direction. However, this could be a false breakout, so we need to further analyze the price to see what it would do next. So now let's jump into the 1 minute chart to further analyze the price action. So now we are in the 1 minute chart. So this is that range build up in this area, and this is the price push up away from this value area high. So now when you look at the 1 minute chart, you can see that price push up is supported with bullish cumulative volume delta and heavy volume, and also bullish positive delta printed green. So this is an indication where the price could potentially move upward direction. Then also you can see in that price push up, when that breakout is made, you can see large trades, big trades being activated as large bubbles, and you can see these big trades are green. What that means is this price push up is supported by big trades which are bullish, which means large institutions, hedge funds and banks and smart money has been involved in this price push up. So if whenever there's a retracement, they will defend their prices because they don't want to go into a drawdown. However, we are still not sure whether that will happen, because we need to further analyze the price to look into that. However, what I said is a possibility because of these big trades. So now you can see the price is retracing down, supported by bearish big trades. However, you can see when the price reach at 9:41 a.m. New York time, it printed a bullish candle over here. Now the question is, are we looking into a buy entry at this moment? So now there are a few things which we have to analyze before we decide to take a buy entry. So now let's look into what those are. So the first thing is, usually in a situation like this, we are expecting the price to retrace to the value area high. However, in this instance, because the push-up is hard, there's a chance where the price may not come all the way towards its value area high. That's the first thing. Then the second thing is, when we are looking into a retracement, we draw this volume profile for this price leg from this point to this point using the market profile and TPO tool over here. So then why do we draw it? The reason for drawing that is, in the retracement, there is a chance where the price retrace into low volume nodes in this price push up. So what I mean is, over here you can see the volume is low. Over here also you can see the volume is low, and if you consider those are in the discount area, so the low volume nodes in the discount area are possible areas where the price will retrace. The reason why the price will retrace to these low volume areas is because in these low volume areas, when the price push up, there was not much of time for all the trades to fulfill. So there are potential pending trades remaining. So that is why the algorithm and the price possibly retrace towards these low volume nodes to fulfill the remaining orders. So now the time is New York time 9:45. The reason why we wait for nearly 15 minutes after the market open is to see what the price is doing and also to let the price do what it wants to do. So now at 9:45 a.m. New York time, when we look, we can see the price has retraced towards this low volume node, and also we can see the price has started making wicks, and you can see red bubble, big trades, bearish traders tried to push the price down, but they failed, and the price pushed up and printed a bullish candle with a green bubble, which is a bullish big trade. So this makes us interested to see if there is a potential trade setup, an opportunity in this area. However, because Nasdaq is highly correlated with S&P 500, what we will do next is we will go and see the S&P 500 chart at that exact time to see what the S&P 500 chart is showing us. Let's jump into the S&P 500 chart now. So I'm in the S&P 500 1 minute chart now. You can see at that time in the S&P 500, the cumulative volume delta is heavily coming down, bearish. And also you can see in the S&P 500 that area is heavily bearish. So because S&P 500 and Nasdaq can correlate, because of S&P 500 is more bearish at this moment, because of that we will not take a trade in the Nasdaq also at that time. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So I'm in the Nasdaq futures chart now, and we will further analyze the price to see what the price is doing next. So now the time is 9:50 a.m. New York time. You can see the price further retrace down towards these low volume nodes in this area, towards that direction. And also you can see the price has started making wicks in the value area low of this price push up over here. So also it started printing a bullish candle with green bubble, which is bullish big trades. And also you can see at this time when the price made a wick and pushed up and made a bullish candle, you can see it's back with heavy volume. And also in this area there's a bullish stacked imbalance with a green bubble. So this area is potentially an area where the price could start going up. Also, smart money traders we look this area as fair value gap, and this area also has a fair value gap. However, you can see this fair value gap area is very large as well. So now let's discuss how to exactly identify the fair value gaps precisely using volume profile concepts, rather than blindly considering those areas as fair value gaps. So rather than blindly considering this area as fair value gaps, what you can do as a volume profile trader is to look into the low volume nodes in this price push up. So because those low volume nodes act as a magnet towards the price. So you can see there's a low volume node here, exactly here, and there's another low volume node exactly here, and another low volume node exactly here. So this price halt and the wicks are happening in this low volume node area over here. So which is how you identify fair value gaps more precisely. So with those confluences, now we will look into a possible buy entry in this area. However, because Nasdaq highly correlates with S&P 500 chart, we will now jump into the S&P 500 chart to see what's happening over there. So this is the S&P 500 1 minute chart at that exact time. You can see still it's bearish. However, you can see now when these wicks started printing over here in the S&P 500 chart, you can see that's backed with heavy volume. Plus you can see bullish candles started to print in that exact area. Also in the cumulative volume delta, it made a swing low and it has started printing some blue bullish candles. So because of that, if this is a potential swing low, and because the bullish candles and bullish cumulative volume delta and heavy volume, we could consider taking a trade in the Nasdaq. However, we have to be very cautious in taking that trade. Now I'm back in the Nasdaq chart, and you can see at that moment the cumulative volume delta is overall bullish. Also you can see it printed a green bubble, which is a big trade taken by big buyers. So considering all these facts, and also considering that this retracement is in line with these large big trades over here. So these large big trades, big banks, institutions and hedge funds who have taken these trades has a possibility of defending this price level, and it being the value area low. And also these big sellers, these red bubbles, they failed over here. So when the price reach over here, there's a chance where their stop losses can get triggered. If they have not yet exited from their trades, they will most likely exit their positions. So this all could fuel the price to push towards the upward direction, targeting this swing high and the liquidity above this area. So because of that, what we will do next is we will place a buy stop order above this bullish candle and above this bullish big trades. So let's see what will happen next. So you can see the price took our trade and the price pushed towards upward direction, targeting the liquidity above this swing high. And we took our first partial take profits in this area for a 1 to 1.6. Also you can see in this price push up, that is supported by green bubbles, which are big trades, which gives us more confidence that the price is pushing up. So now the question is, after we take our first partial profit, how long are we going to hold the remaining part of our trade? So let's analyze that now. So now I'm in the 30 minutes chart again. So since the price is pushing upward direction, so our target is towards this volume point of control on this date, because this volume point of control acts as a magnet for price. Also you can see the smart money traders would look into these areas as fair value gaps. So you can see a large fair value gap over here and a large fair value gap over here. So there's a chance price move as a magnet towards these fair value gaps. However, what we can do is we can use volume profile tool and volume profile techniques and understand and identify the precise fair value gap locations. Let's do it again now. So what you can do is you can use the market profile and TPO tool and draw it to this price swing down to identify the low volume nodes in this price in this area. So you can see low volume nodes in these areas. So the price is currently over here in this area. So if the price is pushing up towards this volume point of control, these low volume nodes over here and over here has a chance of acting as magnets. So let's mark them using horizontal rays, one over here and one over here, which are potential price targets. So now I'm in the 5 minutes chart and you can see those two lines in the 5 minutes chart, the low volume nodes, and the price potentially could move towards those targets. So because of that, we will hold the remaining part of this trade to see if the price could further reach up. And also these large green bubbles, big trades printing over here, supports our idea of holding the remaining part of the trades towards upward direction. So these large bubbles are smart money, hedge funds, big banks adding more positions to the price push up they have initiated, which means this is further accumulation of price. And also you can see the cumulative volume delta is bullish and it's making higher highs, which supports our idea of holding this trade further up, also backed with high volume nodes. So what all that suggests us is the possibility of holding the trade further up. So this is what you call as active trade management. So now you can see it's around 11:50 AM New York time, closer to the New York lunch time. So this is the area where we exited the trade fully. So our stop loss was below this swing low, and you can see during the price push up, mostly what it has printed is green bubbles, which means aggressive buyers has heavily involved in pushing the price up. You can see it's only less amount of red bubbles, which means less amount of aggressive sellers. And even if the aggressive sellers tried over here, they failed and the aggressive buyers kept the price pushing up. So that is why we kept holding the trade to this level. However, when we see the price was resisting in this area and when we see these red bubbles printed and when the price came down and made a swing low, so we were a little bit cautious. So we moved our stop loss as a trailing stop loss below this swing low and we were monitoring the trade. So you can see at around 11:45, aggressive buyers, these green bubbles, try to push the price up, and also you can see bullish stacked imbalance printed here, which means aggressive buyers are pushing hard. However, that aggressive buyers had no result and the price started coming down where it printed these bearish candles. So when we see this large bearish candle starting to print over here, so this is the area where we fully exited our trade. The reason why the price could not push up from over here is possibly there's a large amount of passive sellers sitting here. That means sell limit orders passively absorbing the aggressive buyers trying to push the price up. So because of that possible passive sellers and sell limit orders and this bearish candles being printed, so this is where we completely exited our trade for a remarkable 1-4 winning trade. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video and we will see you in another video.